Well, hello traders and investors. I'm L.A. Little. This is your daily NeoTA wrap. Take a look at these markets, and we do it from a neoclassical perspective. That means we're looking at qualified trend, we're looking at it in all time frames, and we're asking ourselves what's significant, what kind of tests are taking place, and how does that give us information that we can use to better make our trades. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel, L.A. Little. If you haven't subscribed and you want to, all you got to do is reach up in the right-hand corner there, hit the subscribe button. Anytime I push content, you'll get a notification, and that notification will let you know what's happening when it's taking place, new content. I've got the Trading Cube scanner up here. I'm going to start with it. And essentially you can do qualified trends, you can do MTTFs, you can do it across all time frames on these time frames, right? If you do it with nothing, it will simply give you all the qualified trends of everything in the database. And of course, everything in the database also includes all of the sectors, all of the indexes. And if you look at it on the short-term time frame, all bullish, all bullish, all bullish, right? Long-term, intermediate, short. Everything's bullish on the indexes. I'm going to skip these at the top. I'm going to go down to the major sectors here. And the reason I'm doing this is I want you to look at all the major sectors. They're all bullish, right? With the exception of what? Utilities. Utilities, of course, going the opposite of everything else, which is normal. It doesn't surprise me. Shouldn't surprise you. What is going to happen on this time frame, short-term time frame, is you're going to get trend changes, and they're about to take place. Now, when they start to take place, they won't kill the larger trend immediately. But when you see 2 or 3 of these start to change, then you're going to get most all of them to change. In other words, that market's going to have reached some sort of a peak. It's going to come down, and it's going to start breaking swing point lows down here, which is what transitions trend. XLY does it today, I believe. We'll look at that chart and make sure, but I think it did. But you're almost about to see it on the small caps. So let's take a look at that and see what we got, and we'll come back to that other data here in a second. Here's the index numbers, gold, silver. It's pretty much red across the board. You got a little strength in a couple of places, but for the most part, everything's sold down. Nothing big. Small caps, though, biggest. Small caps have been underperforming now for about a week. And, when you see something like that, again, it's trying to tell you something. Before I come back to this, let's pop over to the Russell. So on the Russell, what you see now is a potential ABCD structure that's set up, right? From here to here. It's a small one. And that structure, if it does fire, and it probably will fire tomorrow if it's going to, is going to target right back into this area. And that is your bullish retest regenerate off that prior swing point high. If I bring up the spreadsheet, I threw in the numbers here. It's about a 1.18% to the downside projection. In other words, it shoots for 1346.63. So if we come back here, we look at that, that's 1347.20 is the top, 1340.66 is the bottom. And let's dig into this just a little bit farther. We know neoclassically that if and when we break out, in other words, we go over a swing point high, and when we do that, if we do not test it, and the top here again was 47.20, that next bar after the breakout was 47.84, so we did not test. If you go for more than 6 bars without a test, then we know that the probabilities are extremely high. That's the more than 6 bars there. We know the probabilities are extremely high that when it does finally retrace back to this area, right? More than likely, it's not going to get but a third of the way in. This is such a small bar, it won't be very much, which is basically that ABCD projection we just talked about. And it almost always will bounce out of there. It will get bought. So what I'm trying to tell you is you got a little projection that's setting up here that looks like it's going to take us down, break this area here, In that area, by tomorrow, this bar is actually going to be a swing point low. And the reason it's a swing point low is you've got 6 bars now, count them, 6, since this low was made. That's how swing point lows are created. That push back down into here more than likely gets bought, get a bounce off of that, and then the question will be is what does the bounce do? Will you get another small ABCD structure on that bounce, or will you go back up and hit the highs or make new highs? That's going to be the test if in fact this plays out that way. And if it does play out not to make new highs, but instead sets up another ABCD structure, and let's just project one, and let's say it's something like this, then what's that going to do? That is going to start putting danger on the picture, right? Because you got swing point lows down here. Multiple swing point lows, a break could get you a faster move to the downside on this time frame. Now the good part about it is we got a lot to happen before we even get a shot at these, and that's a lot of assumptions I just threw out there. But you can project all this stuff, you can see what may play out, and you can put that into your trading plan as a result. Remember, this has been the strongest index on the way up. This thing shot up 22%, right? It's getting a pullback finally. Do the buyers come in and buy it when it looks cheaper? That's going to be a key item we're going to have to look at, right? You want to see that happen. And if you go over to the weekly now and factor it in as well, the weekly, to get back to this swing point high that was broken, it's going to be more than 6 weeks more than likely, right? You got 3, 4, 5. This is week 6. Unless we really dive, we're not going to get back to that spot. And so from that perspective, you've got a swing point high at 1263. If it ever gets back to it, right, that's probably going to get bought. Now 1263 is a long way down. We're talking 100 points. From here, we're at 1262, right? Or 1362. So it's not like you're going to sit there all the way back to 1262. You don't want to watch this thing fade this far. But you don't have to, because you've got information that's going to be released way before then of which you can make some decisions about. And if and when these are in danger, all right, that could lead to that faster move to come back here and actually do that test that we just looked at on the weekly. Again, all hypotheticals, but that's what trading's all about. You got to look at your downside, you got to look at your upside, you got to see what's laying out, you got to know what the probabilities of all these things are, and then you can make decisions that are rational in terms of what you want your exposure to look like. So anyway, that's a roundabout way of saying that's the Russell. Let's take a look at the others, see if there's anything of interest there. So we'll start back with the S&P, which we usually start with. So the S&P, let's see what she's got. Okay, on the S&P, so you really don't have anything, right? I mean, we basically have what we've had. That is you got a tight consolidation taking place up here. You got your big bar there. The real test is back here. If that Russell makes that run back to its area, this should be the test at the same time, and you would expect both of them to get bought if it plays out that way. NASDAQ, let's see what the NASDAQ looks like. And let's see here on the NASDAQ. Now, the NASDAQ actually has a bullish retest regen that's not that far away, and it's already been tested once. So your probabilities drop down into the low 60s on the second test. And so even though there's still a higher than a coin flip, that this thing will flop back up, it's not nearly like we were just looking on the Russell where it's like a 92%er. So, I suspect the NASDAQ will hold if we do get that setback and somewhere into that swing point high most likely. If we take a look at the NDX, which actually has been the weakest of the indexes and still is, it too has that same setup that we just looked at on the NASDAQ, and that is this area up here. You got another swing point there, and you got another one over here. So all of those overlap, right? And so the overlapping area, which looks like it would be right in this spot here, that is probably the area that would be bought. So that's where you see that, and that's where I think you'd find support if we got some sort of setback. We've already done the Russell. Dollar was, tried to go down, couldn't go down, flipped back around. There wasn't a lot else going on tonight. So rather than spend time looking at those things, let's take a look at one stock here together. I'm trying to put at least one stock on the board each evening that you can look at. Last night we looked at Tesla. Tonight we're going to look at a natural resource play, because I believe as that dollar does move up towards its target, we're going to see some rotation back into some of these natural resources that have had huge runs. And so I've brought up Cliffs Natural Resources, CLF. Again, you look at a chart, it's easy to get lost in the numbers. This was $5, went to 10. That's a double. So you have essentially a double that's already taken place. So to get a pullback into these bars really is nothing. And those bars is where it's coming into right now. That little area right there. So it's already tested into it once, bounced off of it, and you like the fact that the bounce comes with some volume on the backside, as it goes back up. Same thing here, bounce on this bar, bounce on that bar. You can see the white bars, that's where your bounces are. And then your volume trails off elsewhere. So you kind of got the nice structure you'd like to see. And if you go back to the support area, let's draw them in again. You have this little area here. You've got your swing point high here. What did we just talk about? That is a break over a swing point high that doesn't get tested within 6 bars. Has an extremely high probability that it will get bought when that test finally happens. And this is way more than 6 bars. So if and when we do make it back to this swing point high, which just is a little bit lower, just under 8, let's get the actual number, 785. So that's still a good piece down from here, another buck and a quarter. If it popped into that area, that is a high probability buy for some sort of a bounce at a minimum. And so if one at this point, probably should still be patient, but I like the way this thing is setting up. Now, if you pull it over, look at it on another time frame, you're going to see the same sort of story going on. Now, we know also from our research that when we have a swing point high that gets tested within 6 bars, the probabilities are high that it's going to get into the bottom third of that bar. Now, it just so happens that this particular one, and it's not just this particular one, right? It happens over and over, which is why we're pointing it out. That breakout, the bottom of that bar, right, when all this juice started to come in and this thing took off and broke over to swing point high, has good volume on it. And the bottom of it just happens to be about a third up inside this bar, and that's fairly normal. So what's the low? 733. 733. Let's go back to our daily now. 733 is where? Well, 733 is back into this swing point high. If we take the top third of that swing point high, and it's somewhere in here, right? Somewhere in that area. Actually, that's about half. We probably should pull that thing up a little bit, maybe a little bit farther up. That would be our top third, right? If we just take the width and do it quickly in our heads, it's about 50 cents, 60 cents, right? So a top third would be 20 cents down. That'd be 765. And we just said over on the weekly, right, that we should expect this thing to get into about 733. So you can see how those numbers overlap. And so what you do is you see, and if I pull this one in and put it right there so we have the same picture, right, you can see that overlaps right in there, and then that matches up with this. That tells you that's going to be good support. So what do? Well, you think to yourself, man, if it comes back there, it's going to be a heck of a buy. Finally, if you look on the last of the 3 time frames, and we always look at 3, they're all equidistant. In other words, they all have 60 bars on their charts. We can treat them all exactly the same. This thing has a big potential ABCD structure to the upside. And I guess what I'm wondering to myself is, are we going to see this kind of a move double again into this bearish retest region? Possible. I mean, this thing went down from 76 to just over $1.20. We could get that kind of bounce and it still be bearish. That's trading, folks. That's finding trades that are working, sectors that are working. This sector's hot. Minerals, hot sector. With Trump's win, this sector all of a sudden has juice. And it has juice because the expectation is that we're going to build everything. Right or wrong, that's the expectation. Right or wrong, people are buying it because of it. And until they figure out they're wrong, if they are, they're going to keep buying it. That's trend. Trend's your friend. Have a great night. Have a great weekend. Have a great Christmas. I'll see you after the weekend. You'll have a new view of this site. Things are going to change. We're going to roll out a new site over the weekend. You'll see the familiar top here, but we're going to see some changes all along the rest of the site. And start the new year right on a good foot. Have a great one. Take care. Good night.